Good afternoon. This is Coach Mike from winningstockcoach.com. Going to go over my weekly market overview. It was a very interesting week last week. If you look at the daily chart, you get one picture. If you look at the weekly chart, you're like, dang, we're still in this consolidation. It's being a pain in the butt. Well, that's because that's exactly what's happening. Now, I do want to point out something specific here that we've been talking about for a while, and that's this trend line, this channel right here, this dashed pink or purple line that we've had really since QE3 started back at the end of 2012. And a few weeks back we closed out of it for the first time since the channel had started, and as we've just kind of progressed sideways, we actually found that our close on Friday closed us outside of it once more. Now, that's not a super huge deal because I'm going to go over a couple other things with this chart. But one thing to really realize here is, you see the upper wicks, the little lines basically above the candles over, a few of the weeks that have started out looking good but didn't end so great. This makes swing trading and longer term trading a little bit difficult right now. The reason is we keep basically coming back to the same points on all of our charts. Not just the S&P 500, but many of the stocks that are out there kind of have a replication of this very chart pattern here. So, it kind of leaves us where we really, we have our close here that we talked about a few weeks ago, our swing high point of 1878.04, and sadly we just closed below that this week after 2 weeks above it. And anytime we can get above that point and use that point as a stop for momentum type trades, shorter term trades, we can more than likely find a good deal of success in that. And we need to just be understanding that during consolidation periods, things can get very frustrating for swing traders and longer term traders. I'm going to bring this now over to a daily chart, and the red and green lines you see here, these are Fibonacci extension lines that have proved to be quite accurate overall. As a matter of fact, our last projection was at 1904.61. We hit 1902.17. Which, hey, I'm sorry, the next projection is 1904.74, where our last projection, if we go and use the same tool, I'm sorry, I didn't realize I had already deleted it, was right in here at 1900.57 cents. So, yes, I deleted that one. We were really close there, 1901.57. We were really close into that projection. We barely beat it. We did not close above it, and we began to pull back. Now, I want to show you where we pulled back to. If I use the same tool to give me a projected low target, here you go. We put wicks below it, but we did not close below the 1870.63. So it's been on our daily chart, the Fibonacci extension tool has been a very good projection for where we are with things. Now, we do still have a little bit longer term projection to the downside of this 1820.58, where if we keep in this replicating pattern that we've been seeing the past few weeks at least, we should get up into this 1904.74. And of course, a nice move that gets us out of the consolidation we've talked about will be up into the 1921.14 for the SPX, the S&P 500. Interestingly enough, our Dow Jones Industrial Average chart, a few weeks ago, we finally got a close above the consolidation high line, the swing high we'd been talking about. And here a couple weeks later, we came back and we actually closed right at the line on Friday. This could just be a retest of that support point, so it'll be very exciting to see how we open up in the upcoming week. Because if we make a positive move from there, that's a validation of our support point, moving our support point up from where it's been off the prior lows. So if we can get that positive move up, be watching for that to hold that value, which would basically be 16,478.41 as your support point with the Dow Jones Industrial Average. On our daily chart, it's very similar pattern that we see in the S&P 500 for the DJI. And if we continue to replicate in this pattern and move to the high side, we're looking at 16,775.62 for the replication pattern that's been being made. And if we make that break above that, sadly, one of our longer term projections, this 16,863.05, could provide a bit of a holdup. But once we get through that, we have our final projection, one that we've been kind of watching here over, it's been about a year now, 17,209.51. Now, notice I do have this low side projection, this 15,384.07, and that's quite a ways down. Those are really the projections based on the reaction that we end up getting with this overall consolidation channel. Even though we've been breaking above it and making some higher highs and higher lows lately, which is a great thing, we're still really unable to get out of that consolidation channel consistently. We keep returning back into it. So if we can make that final move that keeps us out of the top side of that consolidation channel, we'll begin to see some of the DJI stocks, 30 stocks, some of those, go-to stocks for a lot of people, we'll begin to see a lot better performance on those overall. Now, last week in my market overview video, we talked about the Russell 2000, and we talked about how it had the highest upside potential simply due to how much it had fallen. And sure enough, we come out of the gates Monday, small caps were just raging, and by the end of the week, we gave it all up, came right back to where we were last week. The difference is this low right here that was made on the 15th. Even though not by much, this low of 1082.53 broke below this overall low of 1082.72. So now we've got an actual lower low than we've seen before, but we don't have the lower close. We're still watching this neckline area that you see I have annotated on my chart. And if we don't start getting that move that we've been looking for with our small caps, with, really, it would have to be quite the explosive move. Then as we begin to continue to see the lower highs and lower lows being made, we're going to see eventually that close below this horizontal line here. And if we get that close below, it could get very, very rocky for the small caps. Now remember, small caps, the market cap has nothing to do with the price of a stock. That's a common misconception a lot of people make. They think, small caps like a penny stock or something, stocks that are $3. Actually, Zillow is one of the best small caps there is. Yelp is another small cap. What defines a small cap is a market cap between $300 million and $2 billion. So it's, market cap is determined by the number of outstanding shares multiplied by the price per share. So the actual price per share doesn't matter whatsoever. But when you're looking at your small caps overall, if we don't start getting that high level of performance, and I'm talking right out of the gates on Monday like we had last week, but with continuation through the week, then we're going to begin to see a more rapid decline, at least in my opinion, in our indices overall. So, I'd personally like to see it go up forever, but I know that's not how it works. And knowing how the RUT has kind of been that leading indicator for the markets over, the past 17 to 19 months or so, take one more look over here at the weekly chart. Our weekly chart is showing an even more serious beat down, or I guess you could say decline, on the Russell 2000 chart. The only difference is we can see here on the weekly chart is a bit of a consolidation level here, which is strengthening us right around this neckline area that I have labeled this horizontal line. So I'm not going to be the one that says, oh, it's all over for the small caps. That'll be if it closes below this line, which, it's really kind of testing the patience there. But I'm also not going to be the one that says small caps are going to run hard. I'm simply going to trade what the markets give me, which is what I always do. I am still looking at small caps heading into this upcoming week, simply because if we make bullish moves, there is no doubt that small caps have the biggest upside potential. You can see that just on the charts I've gone through in this video. And as a trader, you want to focus on the stuff that's the closest to your support levels with the highest upside potential. And that's how your account grows. So, best of luck in this upcoming week. This is Coach Mike with WinningStockCoach.com, and God bless.